What's going on, everybody, and welcome back to another episode of the Midterm Rental Show. I'm your host, Kramer, and in this episode, we're going to be talking about the downsides to midterm rentals. So, without further ado, let's go ahead and jump in. Okay, so if you've been following me for any period of time, you'll know that I love midterm rentals. I own 10 units myself. I plan to double my portfolio this year, and I'm all in on midterm rentals. And on Instagram, I always try to show the good side and the bad side of midterm rentals. But to be honest, most of the time, midterm rentals are awesome. So most of the time, I share the good things about midterm rentals. But I wanted to make a podcast episode all about the downsides of midterm rentals because whether you're already doing them or you're thinking about jumping into the midterm rental game, I think these are the top 5 things that you need to be aware of when it comes to midterm rentals. Okay, so the first downside of midterm rentals is vacancy. So what could happen is you can have a midterm rental guest stay at your property for 1 month, 3 months, 6 months, or even 9 months or more. And during that period of time, things are awesome. You're sitting back, relaxing, and just collecting the cash every single month, which can be great until that tenant moves out. And this is where vacancy starts to hurt. Because if your unit sits empty, you go from consistent cash flow for 3, 6, or 9 months to now $0 coming in, which can really, really sting. And yes, of course, there are ways to minimize vacancy, such as running a hybrid model where if you have any gaps or empty nights, you can run it as a short-term rental. But I think it's very real to say that it can be stressful to hunt and find your next midterm rental guest. Downside number 2 is midterm rentals are not 100% passive. Like I mentioned in the previous example, yeah, when you have someone in there for 3, 6, or 9 months, it is as passive as you can possibly get when it comes to real estate investing for that period of time. But when you are hunting for a new guest, it is very much active work. Whether it's answering messages on Furnish Finder, doing outreach to insurance companies, connecting with realtors, screening tenants, or doing anything else related to running this business, just know it is not 100% passive. Now, luckily, yes, you can still do this while having a full-time job if that's you, but it's going to be more work than just running a traditional long-term rental, but it is going to be less work than running a short-term rental. Okay, downside number 3 is furnishing costs are real. I think this is something that a lot of beginners overlook when they're thinking about jumping into midterm rentals, is they just think about the cost of the actual property itself, but they don't think about the cost of the furniture. So again, compared to a long-term rental where you just need to budget the amount it's going to cost to buy the property, with a midterm rental, you need to not only budget the amount it's going to cost to buy the property, but also to furnish it, which could be $5, $10, $15, or even $20,000, depending on the size of the property. And then on top of it all, as you own the property longer and longer, not only are you going to have maintenance that's going to be required in the house, just like if you were for any rental property, but you're going to also need to budget and factor in reserves to replace furniture in the future. So sure, some things like bed frames, those can last years and years. But if you allow pets at your property or, things just happen and a tenant ruins a couch or a chair or something, you're going to have to replace those. And yes, you might be thinking, well, Bailey, if a tenant damages something, don't they have to pay for it? Usually, yes. But it's still something that you need to budget in because other things such as pots and pans or a new vacuum or new dishes, those are things that just are going to have normal wear and tear that you're going to have to replace and budget for. Downside number 4 is going to be tenant expectations. So I would say 90 to 95% of the time, the tenants you'll host in your midterm rental are super chill. But 5 to 10% of the time, you're going to get guests that are a little bit higher maintenance. And for those rare but instances that do happen, they can have a big impact on you. And let me give you an example. I had a tenant who checked in, and this was at the time of recording this only a few months ago. So the tenant checked in and they were booked for, I want to say 2 months. And as soon as they checked in, they sent me a message and said, hey, Bailey, I hate to say this, but it smells like smoke in the property, like cigarette smoke. And we want to leave, check out, and stay somewhere else. And this was really tough. So first off, the tenant was right in this instance. There was a very, very, very minor smell that my cleaner didn't even notice herself. But when I sent in someone else to check, they did say, yeah, it does not smell perfect in here. So that was fair of the guest to say, hey, it doesn't smell good in here. We want to move somewhere else. Totally, totally fair. The problem though, and again, downside to midterm rentals, is when this tenant said, hey, we want to leave, and I gave them a refund and had them leave, I went from having 2 months occupied down to 0 months occupied in the matter of literally seconds. And then I had to repaint the entire unit, which cost me, I think, $3,000. Plus, I lost out on about a week while it was vacant and being painted. And yeah, it was just a little bit of a mess. Now, of course, that's why having reserves is important. And that's true for any rental strategy you're going to be doing. But with the midterm side, it just stunk because I went from having 2 months of really solid bookings to 0, and I had to find new tenants in the meantime. Now, luckily, I was able to get new tenants in this unit fairly fast. But again, the longer you're vacant, the more exposure there is. All right, and downside number 5 is market risk. So what I mean by this is the market you choose is going to be extremely important. You can take all the tips that I share on this podcast and on my YouTube channel, but if you pick a bad market, nothing else matters, and your property is likely to lose money. And I know this might be tough to hear, but it's the truth. So one of the main things when it comes to midterm rentals is making sure that you're in a market that not only has high demand, but has lower supply. Because let's just take Orlando, Florida, for example. There could be a ton of demand for midterm rentals. So you might think, oh, well, that might be a good market to jump into then. And then you might rethink and say, well, there's also an extremely high supply of midterm rentals in that market specifically. So just because there's a lot of demand, if the supply is even greater, it's going to be really, really tough to not only get your property rented out, but if you do get your property rented out, you're not going to be able to rent it out at a premium like you would if you were in a market that had high demand and low supply of midterm rentals. So those are the biggest 5 downsides of midterm rentals. And again, I don't share this to scare you. I share this to be transparent with you guys and let you know that as much as I love midterm rentals and as much as I am all in on midterm rentals as we go into 2026, as I have been the past few years, I just don't want to make it sound like midterm rentals are perfect. There's zero downside. It's the only strategy to make money in the world, because that's not true at all. So I hope you guys appreciate the transparency. Again, I don't mean to make this podcast to scare anybody, but I just share it to be transparent. So again, hope you got value, and I will see you in the next episode. Peace.